Just when we needed another fear catalyst for the marketplace, Evergrande has now officially defaulted today. And people are not really talking about this because the Fed meeting is coming up the 14th and the 15th, but this could be another big catalyst, or it may not. That's what we're going to talk about here in this video. So let's get straight into it. Hit that like button for me. Consider subscribing to the channel, as well as that. Let me know in the comment section, do you guys think this is going to be another big fear catalyst like we seen just a couple of months ago? And I'm sure all of you guys remember the amount of fear that was going on in the marketplace just a couple months ago. So let me know your opinions on that. Check out the pinned comment, link for my Twitter account. Go ahead, follow me over there, as well as the link for the buy and sell alerts. If you guys want to be notified every time I make a trade, check that out, as well as the links in the description to get totally free stock. Now, this article says 2 major Chinese firms have defaulted on $1.6 billion worth of bonds to overseas creditors, Fitch rating agency said. Now, it keeps scrolling down on me. It says, Fitch rating agency said Thursday, as contagion spreads within the country's debt-ridden real estate sector, China's... Oh my god! Fuck! Just when we needed another fear catalyst, Evergrande has now officially defaulted on their debt to overseas creditors. What does this mean for the marketplace? Is it going to send AMC into another downward spiral? Is this actually going to be a bullish thing for AMC? That's what we're going to talk about here in this video. So hit that like button for me. Consider subscribing to the channel. Check out the pinned comment, link for my Twitter account, as well as the link for the buy and sell alerts, and a couple of links down below in the description of this video to go ahead and get some free stock, so take advantage of that. Now, this says 2 major Chinese property firms have defaulted on $1.6 billion worth of bonds to overseas creditors, Fitch rating agency said Thursday, as contagion spreads within the country's debt-ridden real estate sector. China's government sparked a crisis within the property industry when it launched a drive last year to curb excessive debt among real estate firms, as well as rampant consumer speculation. Companies that had accrued huge debt to expand suddenly found the taps turned off and began struggling to complete projects, pay contractors, and meet both domestic and foreign repayments. Real estate behemoth Evergrande has been the highest profile firm embroiled in the crisis, struggling for months to raise capital to pay off $300 billion in debt. That is a very large amount of debt. Lehman Brothers, which basically helped to topple the global financial system and almost had a total financial meltdown, had $619 billion of debts. So $300 billion of debts, that's half the size. If they fall, as well as a couple other big players, that is very, very bad. That is leading to potentially China having its own financial meltdown. Now, I don't think it would necessarily directly correlate to an American meltdown, because America is not very over leveraged in the way that it was happening in 2008, but it is going to cause some fear in the marketplace, and that's really what I want to go over and what it will do for AMC. So this says, let's continue down. It says, on Thursday, Fitch confirmed the company had defaulted for the first time on more than $1.2 billion worth of bond debt, as it downgraded the firm's status to a restricted default rating. And they are already defaulting on $1.2 billion. They have, what, $298.8 billion more debt that they will have to service. They're not going to be able to. So whoever holds this debt is going to lose out big. Fitch also confirmed Kaisha, a smaller property company, but one of China's most indebted, had also defaulted on $400 million of bonds. Evergrande's troubles first surfaced in the summer when it made clear how heavily leveraged the firm had become. The eye-watering figures show China's credit markets because the sheer size of the company and the potential fallout should it collapse. Last month, it missed its first foreign bond repayment, but there was a 30-day grace period attached. That ran out Thursday, with some bond owners complaining they had yet to be repaid. Questions have swirled over whether Evergrande is simply too big to be allowed to fail, given its collapse would send shockwaves through the wider Chinese and even the global economy. The Biden administration has closely watched the situation unfold in China. U.S. Treasury Secretary Janet Yellen told CNBC News, "Face the nation, monitor moderator Margaret Brennan in November, Yellen warned that Evergrande's struggles could have repercussions for the world. Real estate is an important sector of the Chinese economy. It accounts for about 30% of demand, Yellen told Brennan in an exclusive interview. A showdown in China, of course, would have global consequences. China's economy is large, and if Chinese economy were to slow down more than it expected, it certainly could have consequences for many countries that are linked to China through trade. And that means basically the markets would be very, very fearful. You would see at the very least American investors that had invested in Evergrande be basically wiped out, and that could send shockwaves through the global markets. Now, I don't necessarily think just because China is having a debt situation with their real estate property developers, that's going to necessarily translate into actual problems here in America. But the fear, uncertainty, and doubt, that is what is going to hurt the marketplace is if this does actually start to boil over. Now, the Chinese government is not really considering taking on all of this debt. They may just let them fail, but it does says Guangdong's provisional government is also sending a work team to the company, which analysts at Jefferies said indicated a potential takeover of Evergrande. So it's possible that they do, but China is really trying to send messages to Chinese companies about debt and being over leveraged. But China has been in a real estate bubble for a very, very long time. Now, what is actually concerning about this is you are not seeing this on CNBC. You're really not seeing this anywhere. And CNBC is probably the biggest financial website that people watch, right? There's a lot of hit programs. Jim Cramer, even though you guys don't like him, he, is on here a lot, does this Mad Money and all those other programs. It's not coming on any of the news outlets, really. So I think this is something that could creep up for the marketplace. And certainly, even though it's not going to lead to American investors losing out a whole lot, it's definitely going to cause some fear and uncertainty. And the fact that this is not being talked about too much makes me believe this will be a delayed effect, that this will come out here, the next couple of weeks. And that's the last thing that we need heading into the Fed meeting, the 14th and the 15th, when basically all eyes are going to be on the Fed. Now, what exactly is this going to mean for AMC? What's it going to mean for the overall markets? And I do think eventually this will catch up and the markets will sell off. Now, if the markets do sell off, like we talked about many times, that puts pressure on the short sellers to basically cover on their short positions, because AMC, when you short the stock, it's like a piggy bank. You have to put up collateral. If the markets do come down substantially, whether it is the Fed meeting, whether it is the debt ceiling, Omicron, if that ever comes back up and causes fear, or if it's this whole China defaulting situation, any of those events that drop the market a lot puts a lot of pressure on the shorts to break that piggy bank per se and to cover on their short positions to get that collateral back. Now, as far as where AMC is standing currently, down 2.75%, still sitting just under this 200-day moving average, which is at $31.75 per share. So I do want to see a break above that, or at least to follow this trend line that we did just put on. But overall, very low volume for the day, only at about 20 million for volume currently, and AMC actually just took a big move to the downside, down 6.43%, just under this trend line. So we definitely got some resistance around the 200-day moving average. Keep that in mind. That's the first level to be watched for. If you guys don't have this marked on your own charts, definitely encourage you guys to do so. It is going to get incredibly volatile, especially when these headlines do start to hit, and that's really what I'm expecting, and I want you guys to be fully prepared to know what this is actually going to happen. Like I said, it's going to cause shorts to have more pressure to actually cover on their short positions, and we do know the short interest is extremely high, coming in at 18.95% short interest of free float. This is only an estimate. We know the short interest is well over 20%. Short interest change for the day, negative 1.09%. Share utilization is 77.82, and the days to cover is going up still, 2.28. So this is incredibly bullish, and this is exactly what we want to see happening, making it hard for short sellers to get out of their positions. Now, circle back to Evergrande just briefly, because obviously this is a lot of debt. Like, Lehman Brothers had $619 billion in debts when they went bankrupt, and that toppled basically the whole financial system around the world. Evergrande has about half that amount of debt, so if China does let them fail, that's going to be a bad situation for China in general, but causing fear in the overall markets. No, I don't think this is going to cause a recession here in America, but it's definitely going to cause some near-term headwinds, especially once this headline does start to make its way to websites like CNBC, Fox Business, CNN. You're going to see some fear from investors and probably some liquidations, because the stock market is up still incredibly high just over the past 2 years or so. Since that low in 2020, basically anything you bought at that low you're up on. So there's definitely meat on the bone to come down a little bit. That could force the shorts to cover or give them a better reason to cover on their short positions. But I do expect this here in the next week or two to come up in headlines and for that fear to come back into the marketplace like I just said. So hit that like button for me, consider subscribing to the channel, as well as that let me know your opinions down below in the comment section. Do you think this is going to cause fear? Do you think it's priced in? It's not going to cause fear? Let me know that information. Like I said, check out the pinned comment and the links down below in the description to get free stock. But that is going to be all for this video. Love and appreciate you guys. Thank you for watching. I will see you in the next one.